And right now, mortgage rates are at the highest level they've been in 14 years, climbing past 6% for the first time since 2008. And that's making it a lot more expensive for today's buyers, obviously. And as applications for new mortgages fell 1.2% last week, that is making it a tighter situation for sellers.
When people say, are real estate prices going to cool off? Yes, relative to how fast interest rates rise.
We're all watching together as interest rates accelerate. Now, if you're a buyer, here's what it means for you. Let's say you want a $300,000 home, and you can put 20% down on a 30-year fixed mortgage. Last year's rate of 3.2% would have given you a monthly payment of around $1,782 per month. Today, that same $300,000 at 6% will cost you $2,193. That's an additional $411 a month. If you're on the seller's side,
prices will have to cool off a little bit for that same buyer to afford that same house that they could have bought at a 3% mortgage rate.
Ted says that's why last year homes in most cities were selling in 2 to 3 days. He says now it's taking 30 to 60 days to put a sold sign in your front yard.
And it's the reason why you're seeing homeowners drop their prices by 10, 20,000. And even in the beach cities across America, you're seeing some prices drop as much as 100,000.
Ted says pay attention to the number 5 in terms of inflation and mortgage rates. He believes that number will dictate what happens next. And his clients are worried about one thing in particular.
I call this the 555, Christy. I mean, this is kind of where I'm at right now. You know, number one is that we saw inflation this week came out at 8.3%. So it's above 5%. Now we have 30-year mortgage rates that are above 5%. But the third 5 hasn't happened yet, and that is unemployment being 5%.
The current unemployment rate is 3.7%, but it's close enough to 5% that Ted is hearing from a lot of nervous clients right now.
So there are many, many people that are worried right now about, will I lose my job? That companies that do not make their profitability will start layoffs. We're seeing that in the tech sector out in California right now, and it's concerning a lot of people. Interest rates will go up as fast as they have to until inflation cools off. At least that's what Fed Chairman Jerome Powell is saying. So I would expect that the next raise here will be either 0.75% or 1 full percent by the Fed this month here in September. And I do not think that interest rates will cool off until late 2023, only if inflation comes down to sub 5%. If inflation stays north of 5%, we could see those days again when we had double-digit mortgage rates.
Can you imagine double-digit mortgage rates? I remember my parents telling me when they bought their house way back in the day, I want to say it was like 13%.
Yeah, that sounds right.
Which and it was just 3% last year at this time. Mm-hmm. So he says, don't panic, obviously. But one of the things he said that really stuck with me was, if you want to just try to take care of yourself, don't look at the economy, look at your personal economy. Mm-hmm. That's what you need to pay attention to.
Yeah, that makes sense. It all balances out. A year ago, I was moving, and if you did not jump on something within 10 minutes after it popped up, it was already gone because rates were so great.
We were in the same boat moving here, yeah. But
it's kind of nice to see, you know, maybe you have time. If you love something, it's not going to be taken away from you so quickly.
Yeah.
I don't know.
All comes around.
Yeah.